Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. Go ahead and share my screen with all of you lovely people. There we have it. It is February the 12th. Hope you all had a splendid weekend. Market has certainly been cooperating. I mean, like really well. Hope you're doing well and taking advantage of it, making some money. Um, want to quickly remind you this is for educational and informational purposes only, not intended as investment advice. It's just my thoughts on what's going on in the market from a guy that's been at this for 4 decades. So the S&P has hit fresh record highs. Let me give you a current. We're over 5,000 on the S&P. Yeah, 5,042. Phenomenal. NASDAQ's over 16,000. Bitcoin went over 49,000. I mean, there is just money being made everywhere. You combine that with understanding some concepts about leverage, and you got a winning formula. We've had 70 consecutive days without a 2% pullback on the S&P. NVIDIA just keeps on a rocking. 10 years up a bit, 4.193 on really strong economic data. Oil's pretty steady in the mid 70s. What to watch this week? Today, just a bunch of Fed speak. Tomorrow we get CPI number. That's a potential market mover. A little more Fed speak on Wednesday. Thursday, initial jobless claims comes out. Thursday is a busy news day. We're expecting 220,000 initial jobless claims. We've got manufacturing index coming out, retail sales, home builder confidence level. And Friday, we get the PPI, which is CPI at the wholesale level. So, this will be data that the Fed is definitely going to be interested in and helping them decide, whether or not they have slayed the dragon known as inflation. Last week's heat map, look at NVIDIA. It just can't be stopped. Microsoft. So I've got trades on both of those. Tesla made a little bit of a comeback. Needs to come back a whole bunch more. Meta up, got trades on that. Google, got trades on that. Berkshire Hathaway, doing covered calls on that. Here's our 1-year heat map. Boy, over the last year, there's been a ton of money to be made. Lily's up more than 100%, Meta 167, Amazon 76, Alphabet 56, NVIDIA 230%. Broadcom 113, Apple much more modest gain, 24, Microsoft up 58. Plenty of money to have been made. Where's the money being made right now? Year to date, large cap growth is up 8.8%. Bear market recoveries. So here we are. From that October low in 2022. So, we're only up 38%. There's a whole lot of room potentially to continue to move. And as I just sort of look at this market and we're getting all these Goldilocks numbers, not too hot, not too cold. We have an election year. We've got the Fed that's going to cut. I think we're setting up to expect a good year. Is it going to look like last year's? Probably not, only because it's very unusual to get 2 years like that back to back, but market looks pretty strong. Small caps are starting to pick up some steam. They need to. They have been trailing. So this is the S&P 600. It is not the Russell 2000. PEs are a bit elevated, as you can see. We have the 25-year average in gold, current, in Navy. So for the S&P, the average is around 16. We're now at about 20. But earnings are moving higher. And this is really interesting. The Magnificent Seven, their earnings growth is going to trail the other 493 companies. Both are good. So it's nice to see the earnings starting to broaden. Earnings are definitely on the uptick. Look at third quarter, fourth quarter. Very nice. All good news. Here's the NASDAQ versus the Russell. It is a landslide. Look at the earnings for these two. One's rolling over, one's moving higher. Credit demand is starting to fall off, interestingly, probably because interest rates have gone higher. Lenders are tightening, or it could just be a lack of demand. And America is stocking up on stocks. More than 60% of adult Americans own stocks. It's fantastic. And the Fed probabilities. So in March, there's now an 84% chance where they stay where they are. Remember when that was a 90% chance of a rate cut? I told you, not happening. And now the rest of the market is in agreement. Not that I have, some inside scoop. I just look at the data and I try to apply some common sense. 50% chance of a rate cut in May. Personally, I think the first rate cut is going to happen in June, like I've been telling you. We'll see if that's right. It's not really consequential. As long as the Fed's not raising rates, we're fine. This week's earnings, Waste Management coming out after the bell today, Coca-Cola. Tomorrow, I'm looking for the ones that might potentially move the market. Most of the big companies have already announced. Coinbase might be interesting on Thursday. 1-year returns, sector by sector. That top one is communications. The second one should say technology. So they're neck and neck, though, aren't they? Communications and technology, followed by discretionary, then industrials, and then you get a big drop off after that. Let's take a look at the charts. See what's going on. The SPX, this is the S&P 500. Charts don't look much better than that. Nice, steady climb. Fantastic. How about the Qs? Beautiful. See that yellow line? That's 50-day moving average. So that is tilted up. That's bullish. Plus, we are above the 50-day. And how about the laggard? The Russell bounced off its 50-day moving average, and it's showing signs of life today. Question is, can it get above 204? So if this hits 205, we could be off to the races. So definitely worth keeping an eye on. All right. That's what I got for you this week. I'll be back with you next week. Till then, be blessed and bye for now.